And joining me now for a closer look at the day's market moves is Boitumelo Letsuma, who's an independent global market analyst. Boitumelo, thanks so much for your time this afternoon. So markets not really having a great start to the last day of trade for the third quarter. Does this have anything to do with news around a partial U.S. government shutdown? I was reading that key data like the jobs print could be withheld unless Republicans and Democrats agree to a temporary spending deal.
Hi, darling. It's always a pleasure to be here. As you once said while I was here, that Trump says something and the world just basically catches the cough. So yeah, it's just crazy how that works out. But what's been happening with the US right now is that they do need to find and they need to come to an agreement because unfortunately the Republicans do not have the 60 seats required to implement their bill, the spending budget for Q3, and I think there is a likelihood if they don't reach an agreement by I think midnight today, they might have to hold. I think they just have to hold the government basically from functioning tomorrow. So we could see that happening. And as well as, the new tariffs that came out recently. I mean, we thought that there's a pause and all the recent concerns and how they've been able to agree with other parties and other countries on how tariffs have been implemented, the fact that new tariffs on upholstered furniture, lumber, and other, heavy duty trucks. It's just interesting that came out of basically like
nowhere. Yeah.
Yeah, so it's also healthcare as well, 100% tariff on even UK healthcare branded drugs. That was very interesting to see. So it's really weird, very weird.
It's
weird
Trump's
time.
world and we just live in it. And I think the crazier thing is that we haven't even hit the 1 year mark under Trump's presidency. And so much has already happened, so much spillover into markets already. But let's move over to other news, talking economic prints, right? PMI figures out of China. While there was an improvement in activity, the index remains below 50 points, meaning that activity is still in contractionary territory. Just your thoughts on that print and the Chinese economy as a whole. I mean, looking at some of the other economic prints over the third quarter, coming in below market expectations, below economists' expectations. And I'm wondering how that will filter through to GDP numbers, especially as government and policymakers have sort of hit pause when it comes to stimulus.
Yeah. I think at this point, the fact that the PMI is still in positive territory, above the 50 mark, it still speaks to, the activity within the region still being positive. But you're right, there has been concerns around stimulus and other factors like factory. But still, the factory production is growing, but employment levels are relatively low. So it's a weird time for global markets at the moment.
Particularly what's playing out in China. Just bringing it back home then, Boitumelo, just on the trade front, it is D-Day with AGOA on everyone's mind. And, there's been talk that the White House supports a 1 year extension period of the pact, but it's still unclear whether SA will be part of the pact. Interesting to see that there's not much of an impact when it comes to the JSE, when it comes to the rand. As I mentioned, that the dollar rand is below 1730 at 1728. And I wonder if this is because the reciprocal tariffs nullify AGOA benefits. So whether it's renewed or not, that 30% tariff is still there. Just your thoughts on that.
Yeah, I mean, it's just a lot of other factors and our sectors are just basically keeping it steady. And I think at at the moment, I'm not really sure how far this will go with the AGOA agreement. And I think, our citrus fruits were the ones that were mostly like impacted
Yeah.
by all the stuff that was happening with the tariffs. And I think at the moment, it really remains to be seen by me. It's not something that I necessarily like covered in depth, but I will be sure to take a further look and perhaps potentially expand further in our discussions.
All right, let's take a look at what's playing out on the company news front. A slim day. Ashura
Yes.
dealing with that bid from primary health care. We will see it delist from the JSE as well as the London Stock Exchange sometime next month.
Yes, it's just so sad what's been happening with all the delistings. It does reduce investment options for South African investors. And I mean, we've also seen other delistings from Distal as well as, Mediclinic and Royal Bafokeng. But the group did post positive results. I think they had like rent reviews that were completed in the first half, and they increased like 5.6%. And there's also been an attractive pipeline of other opportunities. So they're looking for growth within the next 2 years, and it's just unfortunate that people that are invested in the stock might not actually see that coming to, what might not benefit from that in the listed space. So yeah, it's unfortunate that they will be delisting.
A delisting on one side, but they can still get some of that exposure through primary health care properties. Now, let's just hit pause on the conversation before we get to your stock pick. Let's take a moment to touch on which counters your industry peers are watching closely.
Naspers has, as pointed out, done particularly well this year, but Tencent has done really well, and the rest of the assets, the e-commerce assets, also starting to really gain traction. So on a sum of the parts basis and a discount basis does remain attractive. I think there's also been something technical. It's underperformed Process, which is its asset that it holds all the underlying assets. Because of the share split, which is taking place next week. So that's quite exciting. Well, it's actually technically will trade X on Wednesday, where it's split 5 for 1. So the board is trying to make the share price more accessible from 6,000 Rand a share, say, to 1,200 Rand a share, to make it more tradable. And they suspended the buyback for a week. So I think they're going to catch up on that, and you're getting a good entry point. So it's tactically an interesting entry point here, which to what remains a very attractive investment case.
If you take a look at some stats coming out of the US, whether it be labor or GDP growth or even the property market. So what I'm looking at is a bit more of a fundamental view rather than what Richmond is selling. Richmond's results were pretty good in euro, but it got whacked because of euro strength versus the dollar. And considering that the US is not doing as badly as people thought, I think the dollar is oversold, and any strength in the dollar will be good for Richmond's businesses in any event, apart from its fundamental operations, which I thought was a pretty decent result. And compared to the other companies in that sector, I still think they are the better position, the better price, with some upside if we do see dollar strength coming through.
So Rowan and Rickus going for JSE heavyweights, Richmond and Naspers. Your thoughts on those counters?
Yeah, so those are some of the popular picks, mainly used for anchoring a portfolio in SA. And just looking at Naspers, that's definitely the most popular one, providing a exposure to the global bourses, and it can also be used for proxy in investing in Tencent, and that's a value add for most investors. And I think, just looking at the financials, the firm did manage to recover some of those operating headwinds we saw in 2024, and basically like almost doubled earnings. So that actually speaks to its resilience. And yeah, it just still remains one of the most preferred stocks in South Africa. And with Richemont, equally good compared to Naspers. They just fall within the same league. This is a Switzerland-based company, and it's a luxury goods holding company. And what appeals to investors is how the top 1% are usually very willing to spend on luxury goods from their portfolio. And yeah, it also still maintained very high profits despite incurring a loss from its discontinuation of the YNAP business. And it also has like a relatively strong and robust cash position, and continues to experience growth in other regions. Although I think Asia is in a bit of a wait and see period, but the firm overall appeals to a very niche market, and it's a good anchor to have in your portfolio.
All right, you like both counters, but they are not your stock picks. So quickly before I let you go, where are you seeing opportunity at the moment?
I'm seeing opportunity in the Satrix Top 40 ETF. Well, Satrix 40 ETF, which basically tracks the JSE Top 40, which gives exposure to 40 of the largest, most liquid companies listed on the JSE. And through this ETF, it's easy to get exposure to the likes of Naspers as well as Richemont and other industries such as banks and mining. And it's a passive tracker. So what appeals to me is basically how the fees are relatively lower than actively managed funds. And it also allows you to gain entry into the market as a novice investor, so you don't have to have the hassle of picking the stocks yourself. And so even though it's experienced some headwinds concerning the SA growth story, but the ETF has remained resilient, and it's really a good way to diversify your portfolio. So that's my stock pick for today.
All right, Boitumelo, thanks so much for your time and taking us through trade at midday. Now that was Boitumelo Letsuma, independent global market analyst.